What's going on, investors? This is Tyler from Augury Research, and this is the first ever episode of Augury After Hours, where we're going to have a little bit of fun. Hopefully, we're going to learn a couple things. This is going to be semi-educational, semi-entertainment, but first things first, you have to understand nothing you see in this video is investment advice whatsoever. This is for educational and entertainment purposes only. I will be giving my best Portnoy impression. I got a full cooler here, ready to talk about AMC in this absolute amazing display of human behavior. is what we're gonna call it. In the cooler, we are drinking the king of beers, Budweiser. And let's keep them cool. Oh my God, my mouth has been watering for this thing for the last hour trying to get everything put together. Finally have this is incredible. So we are going to be talking about AMC. I haven't had a Bud Heavy in very, very long time. Let's see how this sucker tastes. Okay, we can work with that. All right, so I have not really been into the whole AMC thing. My internet's been in and out the last couple of days, but I am going to break it down, trying to get my thoughts as to what's going on, and I guess get myself caught up to speed while bringing along everyone else. So without further ado, I'm going to turn on my screen share and I'm going to start getting into this thing. Right, we'll share this one. All right, and we're off. Okay, so basically, I got no clue what's going on with AMC. I know it's obviously like a Reddit pump, and like a million people are messaging me, but I have not been following the company. But I mean, I understand what's going on. We have a gamma squeeze, and maybe that's a really good place to, I guess, start. Is that gamma squeeze? So I guess we will pull up the chart in this AMC. Quite a move. Basically, AMC is up. What did I just post on Instagram? AMC is up 2,850% year to date. Wowie. So if you were holding at the beginning of the year, we're talking about 28 times your money. So $1,000 is $28,000. $10,000, $280,000. So I do know that these numbers are actually wrong. But since we are on this page, and this does have the short float, I think two things that we need to talk about when going through AMC, which are important. This is what I'm looking for. I got to get a notepad out. So, AMC gamma squeeze. What makes the gamma squeeze possible? Everyone's going to be looking for this. All right, so gamma squeeze. I mean, these things are incredible. We all saw the GameStop one. That one was insane. And this one looks pretty insane too, but this has a very different dynamic. Right off the bat, the dynamic is completely different. First off, GameStop had more shares short than were outstanding, because what happened in GameStop is these guys were shorting the stock, and the company had so much cash on the balance sheet that they said, and the business was not going, it wasn't dead, right? It wasn't a for sure bankruptcy. It wasn't a for sure zero at all. So they really had, when you're shorting something at $3 a share, $4 a share, and you're talking about your max reward if you're short is $4 a share, and you look at GameStop trading at $165 million, revenue was GameStop had tons of revenue. All they had to do is clean up operations a smidge, and they could probably turn a profit. And those guys really had no business being short, but the short float was much larger. And then obviously in GameStop we had the whole gamma squeeze, start as well. But what people don't realize is the float was so thin on GameStop. I mean, it was remarkably thin. I haven't watched the level 2 on AMC to see if it trades similar or not, but GameStop's float was razor thin. I just recently saw that someone is selling shares here, so and we can see here. I actually already know. I guess I'll show you guys how to do this. Figure out how many shares are outstanding, because we want to figure out what the float is to kind of understand the dynamics of this trade. So I'm going to go right into the most recent 10Q, and right here we can see 450 million shares outstanding. I hope you guys can see that on the stream. I know it's probably going to be pretty small, but now I don't want to take that number because I already know the financial condition that AMC was in at the beginning of the year. So I'm going to assume that they've been raising money. I've heard about it a little bit in the news, and I know that they've had they have raised some capital. So that number was posted 3/3 or at the end of March. And really quick, you can go down here and look at any raises that they've had. So it looks like we have 2 to worry about. So they had a shelf, right? So that's a shelf. And then they actually tapped into it. They raised $400 million, or they've registered $400 million, 43 million shares. So 43 plus, what do we have here? 450. Okay, and let's see what this one is. So it's another 8. So let's say 50 million, and they raised a total of half a billion. It's a ton of money for AMC, because this is not even a good business to begin with. And I'll go into that too, because that's really, really important. All right, grab another one of these guys. All right, so, and here we're gonna want to basically, I'm gonna command F this because I don't want to be here all night. But oops, I need to shares. Maybe we could find shares outstanding. No. All right, we need to. I want to find the exact or the most recent number of shares outstanding. Okay, right here. So 500 million. So 500 million 500, we'll call it 500 million. And we want to see what's the price of AMC stock. $68. So 68 times 500. This is a $34 billion business. Now, you'll see people say this is a $34 million business. But I also want to remind everybody that price is so temporary. Price is temporary. And, fact of the matter is, obviously individual investors like myself and most of the people that will watch this can easily unload them shares that they have into basically these market makers and these guys that are caught, backwards right now, which is a terrible position to be in. And one thing that I always say in my investing that's very important is all about positioning. Always want to be in good position. It's fundamental to good investing. And I also, as you watch this, keep in mind I'm a short seller, so I'm always going short. So positioning is very, very important for me. Now, I have no clue if AMC is a good setup to short. I'm still doing my research now. I should really just be filling out one of my sheets. Guess we'll go through the whole process on the stream. Augury After Hours was giving away a lot of good information tonight. All right, so basically right off the bat, theme. Well, first off, the date. It's got to be the 2nd. So 6/2/21. Ticker is AMC. Price is $68. That is a market cap of $34 billion. And what I'm doing now is I'm taking notes because this is my system that I use. It's extremely valuable to me. I'm obviously going to be running you guys through it, but this is what I do before every single trade. You should never trade without a system, a plan of risk management. This is my process. I also have the Augury Investing Journal that I made for my Instagram page. This is the nice box that you got. I don't know if you guys can see it. My camera probably sucks, but I highly recommend you guys check that out. It's on Amazon. It's Instagram. It's on my website. Find the links. They should be in the description. I don't know if I set up the stream right, but take a look at that stuff. It will be very beneficial to you if you guys are actually going to try to take investing serious. So we know we have 500.7 million shares outstanding. We know the price is $68 per share. That's a $34 billion market cap. And then for theme is very important. As we know, Cathie Wood is super popular. She's a clown, but she's truly the best theme investor I've ever seen in my life. And I'm 27, so I haven't been around that long, but I've studied tons and tons of investors. Cathie Wood is an absolute idiot, but she is a great theme investor. She does not care about these numbers. She makes up the numbers. She gets an idea, she makes them up, but she can hit a theme, man. She can hit a theme. So I'm actually going to call this a Reddit pump theme. And then also / gamma squeeze. Now, next thing I want to do is I'm going to go through what the news event was. What was the trigger for this move? Now, when did the move start? Let's pull up our chart. Oh, it's can I make this smaller? Oh, I can. If you guys don't know, this is finviz.com. Absolutely phenomenal website for stock research. I literally live on here. I think it's $50 a month. I just started paying for it. I've been using the free edition my entire life. The Pro is so amazing. I would pay $200 a month to have this. It's like 50. It's well worth it. I absolutely love it. I can sit on here all day and research a million stocks. So if you guys don't know, just a little bit of technical analysis real quick. Okay. This is a top. This is a bottom. As soon as it crosses this top, we now have a breakout pattern. Okay. That's like super, super common. And then right here, right, top, bottom, as soon as it breaks through that top, we have a breakout. Okay. And now it's kind of trending. Looks like it's slowed down a bit. But that's basically the gist of it. And that was just, I guess this is just today's chart. I want to look at and that works on multiple time frames, right? So right here, top, bottom, breakout. And this is not a small move. This is, over 20, 23 high, very low, 22. I mean, so this is, that's very strong. Then 29 down to 25, still a very, 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 very tight range. I'm not kidding. Like on a move that size from 20 to 30, and you have a quick $5 range, that's a very tight range. Okay, someone's backwards. You can even see it here, how tight that range is. There was no downside. So someone's caught short. Slows down here, but once again, and here's something that's very important. And keep in mind too, like I'm a short seller, value investor, short seller. Okay, this is the top, right? Let me see if I could throw this. I have never used these technical analysis things. Oh my God, this is an awesome website. I love it. Okay, you're talking about a gap up. If something gaps up above the most recent, I would call these are obvious highs. So this gaps up above that high and doesn't even retest it. If you're a short seller and you're not running, you're wrong. I'll tell you that. And yeah, and obviously, I'm not even looking at this, but yeah, obviously I was, you got to run there. This is why you must short sell with risk management. If you don't have risk management, and this is why I make these sheets. This is why this system works so well. Is like I got a plan of risk management. I got my journal entry. I know exactly what I'm trading. If you don't know what you're trading, these people on YouTube that are like teaching this dumb, they don't even know what they're trading. They have no clue about the fundamentals of the business. Most of them aren't even any good at technical analysis. They're morons, and people follow them. It's ridiculous. But anyway. Back to this massive breakout. Like someone is done. And you know what this really is? This is a gamma squeeze, right? Where we have people that are selling calls. This is a Reddit pump. Like I said, this is a Reddit pump. These hooligans on it, these guys, dude, these people do not care. Okay. I got friends that got a couple $100,000 on YOLO calls. Oh my God. I'm much more conservative with my money, and I'm all about betting big. I swear to God, I'm all about betting big. I will never YOLO calls, that don't have a positive expected value. I'm very risk conscious. I don't want to lose my money. I want to maximize my money. So I'm very focused on managing risk at all times. And the number one thing that you can do wrong is overbet. And, they're overbetting. That doesn't mean that they won't win. And I hope that they do win because they're my friends. But, chances are theory, they're not. All right. So nasty squeeze. What's going on here? Now, this is the gamma squeeze part. This has options. Now, let's say I want to, play the downside on AMC. I don't know what the borrow's like. I haven't even looked at it yet. But The borrow's probably pretty high here. We have a short float of 22%. That's really not that big of a deal. And I don't blame these guys for being short. I mean, look at these numbers. They're terrible. And this is not a good business whatsoever. I don't care really how cheap it is. It wasn't a good business pre-COVID, and it's not a good business post-COVID. But when you sell calls, right? So let's say I sell one call, and whatever my delta is, that's how many shares I would have to purchase to hedge my bet. Now, what happens when you sell calls is your delta is, and when your delta increases, you have to buy more shares, right? So let's say delta is 60. I sell a call. If I want a delta hedge, I buy 60 shares. Now, what happens is as the price rises, my delta rises, and that forces the call seller to have to buy more shares to keep that hedge on. And what happens is all of these people buy these way out of the money calls that are never going to hit, right? But then they hit, and your delta goes from 10 to 50 real quick, and now you're scrambling to buy shares, and you can't get the shares because no one's selling the shares because everyone's long the stock because they think it's going to the moon, and you're screwed. And that's a gamma squeeze. So that's what's happening here. And it's pretty hard to predict these things, but there's no way that I just missed that. But that's exactly what we see here. Unbelievable. I can't find it. Now let's kind of go into the fundamentals. Let's see what's next on to my list. All right. All right. So next thing is 10-year dilution. We already kind of discovered that there's some dilution going on. So we really finished the news. What was this news fact? Intraday low of $1.91 to 68. Oh my God, that is insane. Look at all of these shares traded. That's insane. The power of the internet, the power of the flow of information, right? It's incredible. Like, I'm on Instagram every day posting, so I kind of get to see it a little bit more than like maybe the average Joe. I realize how powerful the flow of information is, or the spread of information. I posted a TikTok one time, and it got like 100,000 views in like 7 days. It was literally insane. And with the popularity of social media, TikTok, Instagram, investors, FinTwit, information can spread so quickly. And when you get a band of people, I call them hooligans from Wall Street Bets, they can turn your book backwards. And that's why I'm always very, very, very hesitant to share any short ideas, because you don't want your book. This is real money, right? And This is like a poker table or, a competitive sport where you don't want your book backwards. So just sharing short ideas is a bad idea to begin with. And, when people realize that you're out of position, they will take advantage of you. And that's like what we're seeing here in this particular stock. Like, this is very tight range. Even though we're seeing like a move from, oh, what the hell am I doing? I don't know how to use this. Yeah, remove that. I want this. My technical analysis game is terrible. But we can see, 72 high to 56 low. So 725, 7 feet, let's call it, to $5.06. I trade a lot of micro caps, so I kind of think like this, but that's a tight range. And it's tough to get, if you're sized in on something, it might be tough to get out of that. It is going to be tough to get out of that. And you can see that here. Look at this big move higher. This went from, these are 15-minute candles. Stock went straight up from 60 to 60. Let's call it 68. Someone's getting liquidated. So these are crazy, crazy moves, right? People are getting liquidated. 22% of the float is short from who knows what. I mean, probably people thought this was bankrupt. They're probably short from 3, even though they're getting no reward, for the risk that they're taking. And I kind of went back. So I guess we'll go through. The news is really irrelevant. This is not even really news. This is just like the risk factors being repeated. Oh, there was news. No. Okay, so they issued shares. Same thing twice. 524. Let's look at the chart. 524. I actually got to zoom out. So this is actually, and this is when the move started. 524. No one's going to movie theaters. So they have no 10% holders. That's something. Says it right. They have no 10% holders. If you were to play AMC with a $25 implied move, is selling call verticals the play? Gents in the chat, how would you play it? I would call spreads, maybe. I would have to look at the risk reward on call spreads, but put spreads. But the implied volatility is probably crazy. I don't know. It's tough. I don't necessarily, and that's something that's pretty important to bring up. Just because the stock is moving and that the valuation is insane doesn't necessarily mean that there's a play to be made. I don't know. Let's keep going through it. So basically, I think something important to note is no 10% holders. Now, also, that was a major difference too between GameStop, is that GameStop's float was so small, and they had 10% holders, like much different setup than AMC. Now, the good thing is people are going to be hoping that this is an AMC style GameStop style move, and they're more than likely going to be wrong, and people will be even more because now that we saw how powerful GameStop's move was, people are going to think even bigger, because that's just how people act. Okay, so basically, the Wanda Group, who took this company public, says, we're out of here. They're running, and Reddit's running in. So they're running out, Reddit's running in. Who's going to be right? I'm don't know much about the Wanda Film Group, but they probably got a better idea what's going on. This business was already in trouble, before the start of the year, before COVID hit. Okay. So these are the things that you should be aware of in your CEOs and stuff. When we get to the journal, right? So I'll probably do the journal on my own. One of the things that you need to do is rate the management team. And this is anything with quotes. This is all going to be important for me when I review the management team. Because I still want to see, a little bit more of what's going on in this business. God, revenue fell off the face of the earth. They were doing about $1 billion a quarter to 150 million. Oh my God, that net loss. This is not GameStop. That's for sure. That is certain. They burned $324 million. $324 million through the chute in a quarter. It says it right here. It says it right here. I don't know, are people, this is the thing, people are not reading the filings. 324, they just raised 500 million. They can burn through that in a quarter. So they just bought, how much time? Don't get me wrong. The business did $5 billion in revenue. So $5.4 billion in revenue in 2019. Good deal. 63% gross margin. Good deal. But they cost so much to run these theaters. So it's really, really tough. It's not GameStop. That's for sure. Let's go all the way down. Shares outstanding. 94 million. Ugh, I gotta get my phone out for this one. $94 million shares. 500 million is what we just discovered. 10-year dilution is 431%. God, Reddit, you guys are good investors. Wall Street bets, you guys can really play. Don't let anyone tell you otherwise. Okay, so they have no 10% holders. So next thing I want to know is what's a float, because this is clearly a gamma squeeze. We need to figure out the float. I can't even trust these numbers. This is a big job. Good thing I got another beer. This is the old school way to figure out float. For you guys that don't know, all you guys are pretty new to investing. I'm on year 11. When I first started investing, the tools that were available were so bad. You know, imagine if I was using the SEC.gov website. What a joke that was. It's gotten a lot better, by the way. You don't have to pay for BAMSEC, but I do because I'm addicted to it. I couldn't even switch to unhedged, and unhedged is sweet. I'm a legacy customer, I guess. Okay, so how the hell are we going to figure out the float? We need to go to ownership by owner. I never click on this. Holy shit, Vanguard. All right, so this is great. This is beautiful. This is easy. So now Vanguard Group can sell or do whatever they BlackRock, all these guys, they own so many shares. I'm guessing the float is relatively thin, but maybe not that thin. So 37 million, 37.4 plus 27.3 plus 12.5 plus 21 plus 8.5 plus 6.65 plus 6.5 plus 6.2 plus 5.67 plus 4.8. Oops, 4.8 plus 4.7 plus 4.1 plus 4. We'll round that to 4.1, 3.6, 3.6, 3, 2.8. All right, and then we will say 2, 4, 6. Oh fuck! I was adding put options. Oh my god, there's a ton of puts. I'm an idiot. I'm gonna have to read this finally. AMC is at the top. Where is it? All right, I have to redo this. Sorry. Can't go too fast. Two 7. .3. Skip those. 6.6. 6.5. 6.2. 4.1. Oops. Delete that. Good to go. 3.6, 3.5. Okay, so we're so far at 95 million plus these ones are now, we're now getting into smaller territory. One. All right, so we'll call it 100. We'll call it 100 million of basically locked up float. So float is like 400, and then let's discount. Let's discount the shares that are short. So we'll go back to here and we'll say, okay, roughly 20% of the float is short. They have 450 as shares outstanding. We know that's not right because we looked it up. So let's say the float is 400. You know, it's probably around 310 million. And to be honest, doing what I just did is really unnecessary. You just need a rough estimate. I mean, okay, most of us are not even going to be trading a fraction of that, so we can probably get in and out pretty quick. I mean, I would want to watch level 2 first. I want to see how many computers are trading it, but float is good. I like to just, I don't really need it for this stock, but next thing I would do is what's the market value of the publicly held float? In this case, it's pretty large. You know, the public owns 310 million shares of this at about 310 million shares at 68. They hold $21 billion of this. So $21 billion of AMC is what the public holds. I'll try to keep quiet. All right, stock splits. All right, it's already 9:15. Zero stock splits. All right, so cash. Remember, they raised about 500 million. Let's subtract 300 million. This is off the top of my head. I briefly looked at it earlier. So cash burn is probably around like 300 million. They had 800 million on the balance sheet. Then they just added 500 million. So we're just going to add 200 million. $1 billion in cash. Okay, let's look at debt. Let's just look at the entire balance sheet while we're here. Current assets, we'll add 200 million to that. So about 10.68 billion. Current liabilities. Oh, I'm sorry. My mistake. Current assets are 1.2 billion. Current liabilities are, let's call it 1.58 billion. Net working capital, terrible. And you can write that in there. You don't have to be so specific. You can just write in there terrible if you really wanted. I'll do the math here. 0. So ugly. Very ugly business so far. Now, shareholders' equity, we're going to call it 10.68. Minus, let's take those liabilities for what there are on the balance sheet. Dude, this business sucks. So the public owns $21 billion of an asset that has a shareholders' equity of negative $2.1 billion. Good job, guys. These are our friends, individual investors. All right. Now let's go into accumulated deficit. $5.9 billion. That's the total amount of dollars that this company has lost over time. They've raised 3.6. This does not include, so this is really 4.1. They've raised $4.1 billion to lose $6 billion. Good job, AMC. Not a good job. Cash per share, they have $1 billion divided by 500 million. $2 of cash per share. Cash plus debt, let's call it 1 billion cash. Total, let's just bet real quick. We'll count that as debt too. So I actually got to get my calculator out here. I got so 610 plus corporate borrowing 5.5439 plus, let's count it. That's operating lease. Oh no. Exhibitor service agreement. That's a new one. Can't say. I don't know if I've ever seen that. Why can I not highlight this? That's not what I'm looking for. Okay. All right. Oops. $4.4908. So we got $11 billion in debt to $1 cash. Eek. Not good. All right. On to the income statement. This is a quarterly report. Look at that drop off. That is brutal. That'll hurt a business so much. These dollars are so real too. It's insane that people are actually buying. If you're holding shares, fundamentally, this has no value, like very little value. Don't get me wrong, like having $5.4 billion in revenue is valuable. Depending on the business model, I think they can make this work, but the position of the overall business is terrible. It's like, this is why it happens, because this is so irrational that if you're buying this whole business, you're running for the fences. I mean, the people that own it are getting bailed out. Like, so my buddy texts me, he's like involved in this startup that owns a bunch of this stock. And he texts me that one of his holdings owns a decent chunk of AMC, and then it's up a bunch. And I'm just like sitting here thinking like, yo, this is the time to sell. This is like hitting lotto. If something you own owns AMC, like this business is garbage. You should be selling, like sell all day tomorrow. Who cares if it goes to 400? I mean, it's very unlikely that it goes to 400. But in the game of stocks, it's all about supply and demand. Supply and demand is the most important thing. It's like you want to anticipate when demand is going to increase, and supply is increasing here, and it's probably going to increase more because I'm looking at the numbers now. Even after the raise, it still looks like dog shit. I mean, they just raised it $500 million. That's a lot. You know, that's a lot of money, and it's still underfunded. Don't listen to me. I'm just looking at the numbers. You don't gotta listen to me. I don't care. We'll see who wins with our bank accounts. All right, Eurono, hold strong, brother. You can sell whenever you want. Like I said at the beginning of the stream, this is not investment advice. I was just going to go through it on my stream for my own personal benefit. Trade yet. If you guys didn't know, Budweiser, the king of beers. All right, so we know we burned around $300 million in Q1. Oh, I'm sorry, that's wrong. Oh, no, that's right. No, it's wrong. It's actually worse. $400 million. Hirono, if you're listening, they lost $400 million. Okay. That's more money than me and you both will ever have. And that's one quarter. $427 million smackers. God, that's a ton of money. It's amazing that they've been able to raise 500 million, but you get Reddit. Like I said, this is a Reddit pump and a squeeze. Very important. Quarter over quarter. Absolutely smack. I mean, to see what these next earnings will look like. 568 to 5. Oh my God, minus 87%. I don't think I've ever seen that. Ugh, that's revenue. All right. Later, kid. Have fun in your AMC stock. Revenue 69. Let's look at a trailing 12 month. Wow, fell off the map. 450. Obviously, it's got to be more. You would anticipate that it's going to be a lot more going forward, but I don't know. There's still a decent amount of the investing public that's scared of COVID, so you never know. So let's see what the gross margin was for that period. 73%. But it's really about the operating margin in this particular business, and that was very negative, right? Because they have so much they got to pay for. So overall, it's pretty bad. But people are buying it up. EBIT. Oh my God, that's bad. Let's just look at how much debt they got. $11 billion in debt. EBIT's negative 2.5. Net profit. God, negative 3 billion. This is like looking at like an airline. Ugly EPS. Negative $21.42. Oh my God. So right, like if we look at the book value per share, which is already negative, that's actually the next thing in my terrible. Like, this is an ugly business. Okay, so all of that's done. Overall, fundamentally, I'm just looking at these numbers. Don't get me wrong, I've had a couple of drinks, but they're very ugly. Obviously ugly. No 10% holders. Offerings have been, I don't even need to do too much. Just say 500 mil. I guess really quick, just go through the rest of my process so you guys can see it. But the numbers speak for themselves. Now they're not everything. Okay, let's see what they're doing to try to bounce back. Yeah, let's check it out. Let's see if this is any good or not. It will take just a minute. Let's go, AMC. Show me what you got. I'm a potential investor. Okay, I can return my stubs. Great. That's not any good. Not any good. These are your bets. These ideas suck. This is terrible. This is like standard. I was looking for something to wow me. Like, if it's not wowing me, then I'm not. Hey. Free popcorn. That's speaking. See if there's any AMCs near me. Oh, Boy in Cinema. That used to be the move. That's where I used to pocket my my mom used to give me $10 to go there, and I used to pocket it. That's actually how I funded my brokerage. How far do I gotta go to get free popcorn? Why does it have me there? Augury might be taking a road trip. Okay, so downtown West Palm. No kidding. I can only imagine how much this real estate is costing them every quarter. Oh, this is actually a really awesome theater. I actually went to this. I went to this bar not too long ago. It's a really cool place. But I actually went with Maj. Shout out Geo Investing. Perhaps one of the 10 people watching. Speaking of that, radio show tomorrow at 2:30 p.m. If you're in South Florida, make sure you check it out. There's that promo. Check off the checklist. All right, so basically I go all the way up to Palm Beach to catch a flick and grab some free popcorn. Overall, website looks pretty good, though. I mean, I don't think it's terrible at all. I'll give it a B. I'll give it a B. I think it's a solid B website. All the buttons work. Everything seems to work. So they're not that broke. They're broke, but website's still working. Oh, Tom and Jerry the movie. Maybe that's what I'll go see. All right, off the website. On to the next application. We don't need it. Reviews. Customers, we can say Reddit. And perhaps free popcorn. I think AMC actually has a pretty good brand, so I'll leave that here as a B+. They got the whole Reddit community behind them, and these people are all in. And at a $34 billion valuation, the brand value must be, I don't know, 36 billion? Longevity. Okay, let's just think here for a second. Streaming is in. I can watch a movie from my house, don't have to go to the theater. COVID may be an issue. Longevity is not good here. This actually might be, sadly, I actually love going to the movie theater, but it's not good. Let's call it D plus. It's bad. It's bad. Business grade is bad. Strengths, free popcorn is pretty good. Weaknesses, COVID. Nah, that's not a weakness. Weakness is fear of COVID. Fear. Threat, COVID. Opportunity, gamma squeeze. Okay. Business grade F. It's terrible. Home run potential. All right. Let's actually think about this. Home run potential is hard because this actually has a shot of squeezing. That's its only hope. But it's very real, so you have to count it. It's not terrible. Home run potential, B and change. I'm going to give it a hard B. Oops. Can the business hurt me? No. Gamma squeeze can. Obviously, because I'm going to be short selling this, not buying it. Confidence, low. Setup grade. Terrible. Setup is good. Fundamentally, setup is good. Technically, setup is bad. It's not a great setup. It's only average. And that's it. That's the answer. The answer is average. I'm definitely not going to fool myself into thinking this is a good idea because it's most definitely not. Oh, how did I do on evaluating this company? Check, check, plus. I did a pretty good job. Business value is, I don't even got to do it. Low. The answer is not 34 billion. And it really doesn't take a brain surgeon to figure that out. It's not worth 16 billion. And if you don't understand that based on what the business is doing, the business wasn't good. It's not like this business was really good prior to COVID. Okay, EBIT was okay, but free cash flow wasn't good. It was very mediocre. I personally like to value my business based on owners' earnings, and they're very irrelevant here. So business is not good. It wasn't good prior to COVID. It's not going to be good post-COVID unless they have some really good ideas, and we just checked out the fact that their website has no good ideas. Not that good of a business. Basically, we already ran through most of the technical analysis on FinViz. Oh, what happened? Doesn't save my chart. But no need to go through it again. That's probably all I'm going to go through. I'll probably wrap it up there. I'm not going to give away too much of my investing strategy, but I will say a couple of things. AMC, I won't end the stream now. I'll go into one last lesson that I think everybody should fundamentally understand. I think it's very important, whether you want to be a clown or not. All right. So on the last part of my process, it's all about the value is actually found in the bet value. So, all right, let's just say we believe in this AMC theory, which I don't. And I want to get it on record. I don't. I would never buy this. The stock has gone from, call it 12 to 65x, 4x. If you want to buy at 62, so let's just say the entry is 62. This can immediately go back to 30, let's call it. So let's risk $30. So stop is 32, risk is 30. Forget about probability for a second. Now let's say, okay, we want a 2-to-1 bet. Let's just call it a 1-to-4 bet. Let's call it a 1-to-4 bet. And I'm just going to say kind of how I think about this is like, am I getting a 3-to-1 bet? Am I getting a 2-to-1 bet? Am I getting a 1-to-4 bet? 1-to-4 bet times 30, $42 of upside. If you're taking a 1-to-4-to-1 bet, you need this to go to 102. Is this going to go to 102 by the end of the week? Because many people are going to be playing stock options. I don't think so. 102. This is no joke. 35 to so all right, a quick little, call it what you want. If this is wrong, I really don't give a shit. Technical analysis is all about what you think. And I really don't care what anyone else thinks about my charts. Okay. I would say my math says that $54. All right. The high is going to be 110. I'll even say the high is going to be 110.35. We'll call it that. That's close enough. All right, whatever. It shows 109. So let's say 110 has a 15% chance of happening. So 110 plus our entry $48 of reward. 15% chance of that happening. This is valuing a bet. If you don't know anything about valuing a bet, you need to watch my video. It's in the course and the link in the I hope. Low expected value there. Let's say there's an 85% chance that we get stopped out and we lose $30 per share. 30 times 0.85 equals, okay. Very negative EV bet. I would sell this bet, actually, that most people are saying, oh my God, this is going to go to 250. Probably not. I'll tell you right now, 250. $150 is next. I would love if this actually reaches 110 in the morning. I actually might short it. That would be my entry. I'd try it at 110. If it's anything in between that, nah, fuck it, I'll leave it. But if it is at 110, I think it's worthwhile. Should have one more of these guys left. Oh my God. Sometimes that's all you need, little rag. But yeah, risk reward wise, it doesn't make sense to go long, especially at 62. Don't get me wrong. People will go long and get lucky if this hits, but you got to be very, very, very careful. And it's just not worth the risk, to be honest. Moral of the story is business is terrible. Bet is not that good. Technicals is strong. Gamma squeeze is very prevalent. But overall, it's not a great bet, and it's not right for any portfolio. If you actually want to do investing the right way, AMC is obviously not the right way to do it. This is a speculator's bet. And if you want to be a good speculator, you need to have good bets, and this is not a good bet. The uncertainty is too high. The risk-reward dynamic is not good enough. But overall, I think it's interesting to go through it and kind of see, will I be selling these bets if it goes to 110? 100. I'll be on here tomorrow morning selling, AMC at $110 per share and probably covering around $70 per share. I'm willing to risk $30 a downside. I'll risk $10. So AMC going to 120 is probably unlikely. That would give AMC a roughly $60 billion valuation. Yes, I think. So I'm going to wrap it up here. Pretty good stream, almost an hour and a half. I went through a lot of stuff. I hope it was somewhat valuable. I know I slammed 6 beers on the way, so it might have got a little bit messy. Any questions? Throw them in the chat now. In the meantime, while you guys are putting your 1.34 shares. Oh my God. Don't worry about it. I mean, it depends what your entry is. So you let me know what your entry is, and I'll help you figure it out. Not investing advice. So I took off NBA playoffs to hang out with you guys. Oh. I think I had Sixers win the series. I had the Wizards. I had a couple bets on tonight. God, how bad are the Knicks? They want to be so good, but they can't. All right, so I guess that's it. I appreciate you, Mark. Thanks. You stuck through the whole stream. A+ job on your end. Plus job on me for going through my whole checklist. Not the whole thing, but at least the fundamentals. Fundamentals are the most important part. Net valuation is the most important. Fundamentals second in my investing strategy. Hopefully we learned a couple things. I know I went through a decent amount of filing, so it was probably net beneficial. AMC's trash overall fundamentally, but technically it's good. Like the gamma squeeze is very real. Vinny, thanks for hanging out. Holy smokes. I'm surprised everyone lasted so long. But all right, it looks like that's about it. No questions. The guy with 1.3 shares of AMC. I mean, dude, that's $60, $70, $100, let's call it. Fact is, you're gonna make $100 in your life. That real risk is low there. You know, if you're like, okay, let's say if I'm betting $10,000 on something like this, $10,000 is like get you a couple things in life. $100. Dude, this is the thing too, is like if you do bet on something, you really need to make sure that you're going to get adequate reward for the risk that you're taking. So don't bet, to win 10 and then stop out at like, 10 or you need reward for the risk that you're taking. And if you're holding 1.3 shares, you're taking risk, even though it's so minuscule. You still should practice playing the game right. And that's like the main focus of what I try to do is like, and the one thing that I've been able to do hoping for 7 figures. All right, I don't even know what that means because it's either way out there or I'm reading it wrong. But it's a risk to reward game. And if I'm going to take $1 of risk, if I'm speculating, I probably want at least $1.04 for that risk. I really, really want like $3 for that risk. So if I'm going to say, okay, I'm going to like gamble, $10 per share, I need to be able to hold my bet for $3 per share, let's call it. And I'm sorry, $30 per share. But if you're not getting enough reward for the risk that you're taking, your account is going to go backwards. It will diminish over time, without a doubt, because this is a risk-to-reward game. So if you want to say, okay, AMC is going to last lesson. AMC is going to 110. If I think AMC is going to 110, and I'm saying, okay, that's $48 of reward. Say I want a 3-to-1 bet, I need to hold out $48 per share. That means I'm not allowed to sell until $110 per share. And I'm risking $16. So if AMC goes from 62 minus 16, from 60 to 46, I get stopped out. If you take more risk than that, you're out of the game. You're wrong. And you're allowed to be wrong. That's the thing that most investors don't get. It's like you can totally, bet on a stock. You can bet any stock you want. Like, speculation is not a bad idea, especially in this market. The higher the market goes and the less valuation really matters, becoming a good speculator is a good idea. I highly recommend. I got a couple books that I recommend on speculation. One is Strategy and Choice by Zuckhauser. It's a phenomenal book. I think Reminiscence of a Stock Operator is a phenomenal book for speculation. What else do I got? That's about it. I mean, you should really know the fundamentals are so important, but that's about it. I'll throw in Fortune's Formula is pretty good for speculation. Like, okay, so I have a sports betting account, totally speculative, expect to make any money. But yeah, like, taking risk is not a bad idea. Taking risk is the name of the game. You have to know when to take risk, and you have to know when to leave risk. And AMC at $62 is a leave risk situation for me. I will be selling risk. If it hits 110, I'll be selling tons of risk by short selling. That's how I like it. Now, will I actually short sell this? No, only if the conditions are right. But at least I have the fundamental analysis done. Business is trash. We have some good stuff. The gamma squeeze is bullish technically. The sentiment, like the Reddit pump thing, is so alive and well. Probably one thing that I should do is actually check it out on Reddit. And actually, so this is actually part of what I call the scouting report of my strategy, and I totally neglected it. And considering the fact that I have to do this before I trade a stock, might as well get it done right now. Whoops. I have one beer left. Everybody knows the rules. This place is a joke. If you want to get dumber, come here. Oh, God. What a nice pillow to lay your head on tonight. 150K? Congrats. Hat tip. And this is exactly why, bro, you're studying in the market, didn't do it. You got lucky. Okay, no car. This is why it gets so popular, is like people post big gains. All right, I have to get off Reddit. It's like blowing up my computer. But I'm surprised we didn't see more of AMC on there. Last thing I'm like, stock splits. Don't even need it. Usually I'll check Seeking Alpha, but don't need to here. It is no bueno. I don't need anyone to tell me. Wow. Stock Twits is crashing because of AMC. All right, I'm going to get off this before it crashes my thing. But, wow. you don't want to, don't get me wrong, like if it's at 110, then I'll probably be selling some of that strength, but you really don't want to be stuck backwards on something this strong. It's so strong. I did not see StockTwits crashing on GameStop, and I thought that was insane. I actually need to update my process. I'll look at that. Reddit might be the new one. Reddit is bullish. But overall, that's it. I'm going to conclude the live stream there. We went through everything from fundamental analysis to a little bit of technical analysis, a little bit of sentiment. Overall, I kind of came to the conclusion that AMC is definitely not a buy. It's not a short. It's basically a nothing unless we get a more lucrative price, where the fundamentals will probably weigh on the stock. If I see a big gap up tomorrow morning, I'll probably enter a bet. If not, I'll leave it alone and then probably ignore it for the rest of the day. See if anything's attractive on Thursday, maybe even Friday morning. But until then, it's a pass. Don't get caught up in the hype. I know we just hyped it up by having this live stream, but that's part of the game. I got to promote my journal, a phenomenal investing tool. If you want to be an investor and you want to actually, do things right, I highly recommend this journal. I packaged it really nice. Designed all the packaging myself. I hope you like it. If you guys don't know about Augury, we are on Instagram, we are on TikTok, we are on Twitter, we are on every social media platform. We have an investing newsletter. We are fundamental investors, value investors. I personally really care about valuing the bet that you're taking. We've had some really good picks in the past. We'll have plenty of more good picks in the future. This was Augury After Hours. As you can see, I'm drinking a beer. I've had a couple. It's 10:05. I need to get cut off here. I went over my limit. Thank God I don't have to drive home because my office is in my home. But overall, check us out. Our journals are on Amazon. If you become a member to our investing newsletter, right, my process and more of my, I got a daily checklist, productivity tools, stuff like that I use. I'm constantly looking for good investments for my portfolio. I obviously want to make money in life. I highly recommend you checking it out. That is auguryresearch.com. Augury, Augury, research. We're on Instagram, and that's really our biggest social media. But we have a radio show tomorrow afternoon, 2:30. Make sure you check that out. We have a podcast at Not Your Father's Stocks. That's on Spotify. I highly recommend. I put together a 30 days to better investing course. Check that out. That is on the website, auguryresearch.com/30 days. I highly recommend that. It's basically everything you need to know about investing in 30 days. We're on Etsy, and that's about it. Hopefully you guys like this stream. AMC is highly popular. If you're not already in it, you need to be planning a risk management strategy, getting out of it, and basically avoiding it if you're not in it already, unless you get really, really attractive price. Until next time, happy trading. I'm out of here. I got to go to bed. Peace.